Now, the next conversation is going to focus on the 24/7 economy. What is the way to survive in the 24/7 economy? Is it math until you can't take it anymore? I don't know, possibly. Please welcome Mark Daly.
Hello, everyone. Very good to be here. Thank you for joining us today. So, Mark, I prepared a few questions to you, right? But before we get started with the questions, I've been hearing a lot about 24/7 mobility, liquidity, and all that stuff. It makes me a bit anxious. So, do we need to start thinking of starting working 24/7 as well? And for the banks, right? When the banks are closed on the weekends, in the evenings, how does it change the whole picture?
Oh, there you go. I've never seen so many people so excited to work nights and weekends. And that's one of the big sides that you have with stablecoins, moving assets 24/7. Does open up a lot of operational and technical complexities that you have to address. So at Zerohash, we definitely take that on for our customers in terms of managing redundancy across banks and partners that we connect to with our issuers, having the technology as well to do this here across chain. We support 36 different chains across USDC today and other stablecoins. But then also be able to manage things from a technical capacity as well, and having a team, an operations team, to actually do it there 24/7, 365. So it's a big jump to make as a business that's looking to launch stablecoin products to actually have that type of infrastructure in place. And as I said, a key thing for us when we talk with customers is that we're able to address that head on. We're able to say to them, well, look, connect via API, SDKs that we have available. You don't have to have that entire operations team to manage that in the back end. But for groups like Zerohash that are operating this here across multiple issuers, multiple chains, having that infrastructure in place is critical for operations.
Well, and if I think of from our perspective, like credit risk perspective, so do you think we need to move to continuous monitoring, or we would expect some kind of an agent that would do it for us in automated fashion?
Yeah, with 24/7, 365, in terms of liquidity and ability to move assets, risk goes up because velocity's gone up across the system. And so when we think about attestations from issuers and partners, how do we know solvency is there, that assets are backstopped? Having that on a monthly basis is probably not a great idea. If you have and we've seen this in the past as well, we've lived through many experiences and major experiences like in 2023 where these assets have depegged. Having seen that in real time and seeing the velocity of these transactions across, in terms of redemptions, you do need that real-time attestation and trust involved there, because transparency here is the major unlock to actually enable adoption for a lot of these assets.
Yeah, I think it's a very good point. In terms of like companies moving into this area, right? It's not like they're flipping a switch and they start being on-chain or start operating stable coins, for instance, right? So what do you think the most credible use cases today where it, immediately bringing the efficiency? And in terms of the payment rails, do you think the traditional payment rails and stable coins or tokenized deposits will coexist, or will something take over in the future?
Yeah, on the use case side, that's something that's very close to my heart. I have the joy of actually working directly with our customers to enable them to offer products into the marketplace today. So if that's with groups like Kalshi, who use Zerohash today for account funding, you can see their customers funding accounts across evenings and weekends, enable them to actually invest in positions inside and outside of banking hours. That's a major use case that we see across many of our brokerage platforms. We also have platforms like Gusto that are enabling contractor payouts. So in that example, dollars are being received by Zerohash from a merchant, convert to stablecoins instantly and paid out to contractors across 100 plus countries today. And then we also have B2B use cases. So working with platforms like WorldPay, where we're enabling merchant payouts 24/7, 365 as part of that product stack. So a lot of the use cases that we're powering today really are going beyond maybe sort of the traditional crypto stablecoin use cases of exchange activity, and actually into like real world assets or real world activity with customers and partners who are using this here for like everyday transactions, from things like account funding to payroll to settlement.
Yeah, I think you mentioned a very good point in terms of how you would get subscriptions to stable coins, which will be converted to traditional fiat currency, right? Which is very relevant to our business. We also recently released stablecoin methodology when we know how to assess the credit risk of stablecoins. But from your perspective, what would be a good definition of a good stablecoin, or maybe like credible stablecoin?
Yeah, I think the sort of thought process I have when you think about stablecoins is, well, one is that stablecoin, is it regulated? What's the regulatory environment that it's operating in? And we're seeing that play out in real time in multiple jurisdictions right now, between Europe and the US especially, where we've had major legislation come to market in the past 2 years that this industry has been looking for a long time. So regulation is the first thing that I think about. The second part is, well, what are the reserves that are actually backstopping that asset? So how are they being invested? What sort of liquidity do we have? And then the third key thing is, like, actually, is it redeemable? Does it have connectivity into the banking infrastructure? Can I get dollars into and out of that issuer to mint and burn directly as well on chain? And is it operational? So those sort of reserves, redeemability, regulation, those are sort of the three things that you think about when you look at a different issuer and a different stablecoin in the market.
Yeah, I think it's also very much in line with our thinking. We also get questions from the market saying, well, what about liquidity on secondary markets? So what do you think about that?
Yeah, so that's a really interesting point of, well, you can go to an issuer today, you can mint and burn direct, but what do you do when that's not available? And that might not necessarily be an issuer fault. Maybe it's a bank partner that you work with that is unavailable. Like, how do you actually get liquidity then for these assets? So you never want to have sort of one single dependency that's going to be a bottleneck in these flows. You've always got to have a sort of redundancy built into the system, and having liquidity partners to enable secondary market access, as we've seen in the past, is like a critical need, I would say. One of the interesting things we actually do at Zerohash as well is that, given that we're doing billions of dollars of volume in transactions, we have the ability to internalize a lot of the flow that we actually see as well. So a lot of mint activity, a lot of burn activity. We don't necessarily have to do all of that directly with an issuer or partner in the back end. And that gives you sort of great economies of scale too, but a way to actually move faster and less dependent on issuers and liquidity partners as part of your transaction.
Yeah, makes sense. I want to also dig deeper into the reserve. I mean, you mentioned already the quality of attestations and reporting, right? What about reserves themselves? So if, let's say, there is a run on stablecoin, right, reserves become critical. So how can you model, this run? Would be like 50% redemptions, 100% redemptions? What are your thoughts here?
Yeah, this is, again, sort of like lived experience on our side. Like, I think back to 2023, which it was around St. Patrick's Day, which is my national holiday. So I'm in Chicago, and that was not a great weekend, I would say. But like, the key things that you have to think about when those moments happen is, one, is the issuer solvent? What were the assets that are backstopping the stablecoin? Are they still available? Is that still true? Two is, are they operational? Is it a technical issue that they've gone down? Am I able to interact with them on chain? Can I still mint and burn? And then three is, do they have banks that are available as well and actually operational to actually move fiat as part of that? And if one of those three things is not there, then you ultimately have a DPEG scenario that's going to happen with that partner. And so a big thing that we've had to build out on our side are things like alerts and monitoring that enable this here to be done in an autonomous way on our side, with humans then on the edge to actually manage the edge cases. But those are sort of the first three things that you're going to look at. And if one of those three things is true, then that's ultimately a DPEG scenario that you're going to have with that customer partner.
Well, I think you also mentioned that regulation is very strong, in terms of assessing the quality of the stablecoin. I wanted to touch on KYC and AML requirements. I think if you have a big stablecoin with like hundreds of transactions, thousands of transactions, millions of transactions per day, is it really possible to implement KYC requirement on every transaction? Or is it more like to the point when the holder is trying to redeem a stablecoin? How does that work, you think?
So we're a regulated business. We very much sit at that intersection between moving assets fast, cheaply, but also in real time for our customers. So compliance and KYC checks and transaction monitoring for us is all done in real time. The goal here, though, is that you want to ensure you do that there before a transaction has started, because once things move on chain, they've moved, and so after that you're in a sort of catch-up scenario. But there's things like transaction monitoring, KYC, onboarding, diligence that you can do as part of a transaction. And doing that earlier within the user flow allows you to operate at scale and do this here in real time. And so you never want compliance to be like the bottleneck of a transaction flow, that it comes after the fact. It's actually you're doing as much as you can in these user experiences to collect that at the front end of the stage. So that's been how we've addressed it head on. We do, billions of dollars a year in terms of transaction volume. We've got millions of customers that are plugged into Zerohash in our B2B2C business model. And we do this here for over 120 platforms today that are connected into our environment. And that's from major GSIBs, groups like Morgan Stanley E-Trade, right on through to more enterprise and fintech platforms like Kalshi and WorldPay and Stripe. And so we sort of see a full gambit of different transaction types. But the goal here is always that compliance is like a necessary point within a transaction, but it doesn't have to be the point that actually stops a transaction or causes the user experience to fail. You can build processes and build products that actually complement that there as part of a user experience. And I think as we see more and more platforms integrate and adopt this technology, you're going to see more and more user experiences that are built to still address that there, that we're not going to have people operating on chain in a pseudonymous fashion. It's going to be KYC, it's going to be integrated in very much a transaction flow, and that's going to bring more and more platforms into this market.
Well, but also in terms of borders, we talk that crypto is like borderless, right? But we still live in the world of borders, and especially in different jurisdictions, you may have different regulations. You take Europe, you have MiCA regulation, US is the Genius Act, and other regulations in other jurisdictions. So how would you see this, from the regulatory perspective? How would you deal with this situation when you're regulated by a few jurisdictions with different criteria?
Yeah, so we're multi-jurisdictional today. We received our MiCA licenses last year. We have a team now that's based in Amsterdam, and so we opened that office earlier this year. So we've always operated in multiple markets. We've always been very adept at actually managing and having close relationships with different regulators. For us, it's been a requirement as part of our business model, because if you deal with if you deal with platforms that have a global business, you've got to meet them and their customers where they are. So building that infrastructure out on the Zerohash side is it's ultimately critical to our business model. And what we've found is that localizing your product across different regions is very much a key cornerstone to growth in those markets. And having localized teams as well that can actually go and interact with those regulators is a major addition to our business model. So we're doing this today across the US, Europe, Brazil, Argentina, Canada, Australia, New Zealand, Bermuda are all key markets where we have local licensing integrations in place.
And do you see any differences in customer behavior or expectations in those markets?
I think what you're starting to see maybe is a different adoption, I would say. So we see different customer behavior where, just in relation to stablecoins, USDT obviously has a stronger foothold in maybe more LATAM and Asia markets than we see where USDC or other stablecoins are more predominant across the US. But those have been some of the major drivers where you'll see different chains as well that are preferred as infrastructure in different markets. And our goal is to be very much agnostic when it comes to the tech and infrastructure that we support. It's more about what's the market demand and how are we meeting that demand within each of these markets and where we've localized our product.
Well, and also from sophistication part of the investors, right? Do they really need to know that they're using a stable coin or that the asset lives on a digital rails, right? Maybe it's just the experience that they don't really need to have.
Yeah, the best user experiences that I see today that are being built, they're not being built with stablecoins as the front end of the product. So there's a number of customers that we're working through this year that'll be announced later this year that are very focused even on just US activity, so customers within the US and how they're using stablecoins to settle faster with those customers in a real-time example. And those user experiences don't have stablecoins at the user experience level. It's very much back-end plumbing infrastructure. And to me, that's where this market's ultimately moving more and more towards. It's more about, people shouldn't care about what asset, what stablecoin, what chain, what network they're operating on. That shouldn't be where we should be pushing users in this market today. It should be more about the benefits that you have from leveraging this tech stack. You know, it's 24/7, 365, it's programmable. These are the user experiences that need to be built in the marketplace to ultimately drive more and more adoption. And to me, it's where, you know, I feel personally I'm spending more and more of my time is with platforms and partners that actually want to go and deliver that type of user experience to customers.
Well, I feel like there is a strong push for traditional players also to make things faster and cheaper, right? But in terms of like comparing stable coins and let's say tokenized deposits on traditional rails, what would be the strategic case for the stable coins in this comparison?
Yeah, you're seeing this play out in the market where we have stablecoins that are being broadly adopted for a lot of general purpose use cases. We're seeing more groups explore tokenized deposits as part of their infrastructure stack as well. And then we're seeing things like tokenized instruments such as tokenized money market funds. And some of the really interesting use cases that you're ultimately starting to see move into this market are where we can move seamless between all three of those. So how can I move from a stablecoin into a tokenized deposit, into a tokenized money market fund, and do that there 24/7, 365 as we talk about like the network effect here that you have. And for a lot of businesses, that actually opens up a ton of value because now I can get access to yield from a reputable issuer in the back end that can enable more different user experiences, but ultimately more value that accrues at the customer level. And so that's where ultimately I think this market's going to move more and more towards, is that as you start to see these assets become more interoperable with each other and infrastructure partners adopt those more and more, you're going to see a lot of different user experiences in the back end for that as well.
Thank you, Mark. And I think, well, we're all moving to like T+0 settlement environment, right? But the price of error is very high, especially on a public blockchain. So if you made a transaction is incorrect, it's irreversible. So technically, you can lose all the funds that you transacted, right? So what are kind of checks and balances are you building or are you thinking of?
Yeah, I think one of the major things in this space, and it's something we talk with a lot of folks about, is that once you've sent assets on chain, they're gone. It's the idea that you can get those assets back is very much not a truth, which is different to if I sent a wire or an ACH or a traditional form of payment. I can always call my bank partner and say I need to have that sent back to me, or that was incorrect details on that. So it just ups the level of risk that you take in this space that you have to deal with. And the way you deal with that is that you have more and more checks and balances in place before these transactions are processed on chain. So on our side, we've built out a lot of things that actually remove that complexity from like the end user. So if you think about a lot of the user experiences today that you might see in the marketplace, the customer has to decide, okay, well, what chain am I sending this asset on? What chain am I depositing to? If it's like an EVM chain, I've got to decide the address, the asset the address, the chain that's been sent on. And so we've built a lot of automation on our side, such as like create two forward addresses that ultimately will reconcile that in real time. So if I've picked the wrong chain and the wrong asset, I can actually reconcile it there in the back end in real time for the customer. So the goal here for us is to actually take those decisionings away from the end user. It's like, how can you build more operations on our side that actually manage that for the end customer, and make this just like an easier user experience where like you can't make those wrong decisions as part of a user experience. And one of the major products that we've launched this year is actually our auth product, where you can now link accounts directly together. So if I'm funding from a exchange account into a Zerohash platform, I'm not managing addresses. I'm actually just linking these accounts directly. And those types of user experience are critical to ensure that you have less and less decisions that are made by the end customer where a mistake can actually ultimately be made on that side.
Interesting, thank you. I guess we were running out of time, so I get to the last question here. There's been a lot of like promises in terms of faster and cheaper, right? But what is one thing that stablecoin enables that cannot be done with traditional fiat currency?
Yeah, I'm sure you'll hear a ton this week about like the different use cases that are in the market. I think the big thing for us right now is programmability. And if you look at the customers and partners that we operate today, you'll see contractors getting paid in real time through platforms like Gusto. These are experiences that are not available in the market today. You'll see people funding accounts on Kalshi during the weekends and evenings that ultimately these are funds that they can't do and get paid out in real time as well from a result of a predictions market. Like, that programmability level, I think, is still very much at the early innings, and ultimately customers are building more and more technology on top of that. There are use cases on top of that as well that I'm really excited by. So that's one thing I'm very much focused on for this year.
All right, so I think it's a good topic to wrap up the conversation. Thank you, Mark. Thank you, audience.
Cheers, thank you.
Welcome to Signal Week.